All right. Today's SPY was up 0.1% today, so we were absolutely flat on the day, and we're still getting rejected around this gap fill resistance just above 455, and we did lose this very vertical support trend line 2 days ago. So it's looking more and more likely that we're starting to roll over from resistance, which means we'll likely come down towards this rising 20 daily moving average and or this gap fill zone right around 441. Now we don't have to go as low as I drew the arrow, and yes, we can go lower down towards 440 to 436, but we're going to have to follow the price action during the pullback. Now if we don't get a pullback and we can stay above this 5 EMA and push through to 455, then we're going to be looking for the next resistance zones just below 458 and up here at 460. So keep in mind, just because we're expecting a pullback doesn't mean you need to short a bull trend. You can simply be patient, reduce your exposure to your long positions, or sit in cash and be patient. On the NASDAQ 100 triple Qs, we were up 0.26% today, and the triple Qs are also sitting right on top of the 5 EMA, and most of the day we were below it. And if you look at the trend here, we haven't yet broken the high on 1122, but we continue to break the previous day's low, so it definitely looks like we're running out of momentum and getting ready to roll over. This pullback in the triple Qs would likely take us down towards 378, but if you want confirmation, wait for a loss of this support zone between 386 and 383, and then once we lose that support, we're likely coming down towards 378 to fill the gap, and if we can't hold that as support, we'll likely come down here towards 370. On the Dow Jones, we were up 0.22% today, and the Dow Jones is still looking strong above 353, bouncing from that level which was previous resistance, and if we continue higher, the next resistance zones or price targets will be 356, and if we break that, we're likely going to 360. If we can't hold this support at 353, we likely come back down to 350, and if we can't hold 350, we come back down towards 345 towards the gap fill at 344. On the Russell 2000 IWM ETF, we were down 0.39% today, and we're still stuck in this triangular wedge, and as you can see, we did close below the 5 EMA today, and we are starting to break down below the bottom of the wedge if we continue any lower and break this support at 177. However, this is still a higher low, higher high bull trend as long as we're above 174, and that's also where that rising 20 daily moving average is going to be. So in the event we get a pullback, that's your risk level or your buy the dip support, and if we can't hold that, then we're likely coming down towards the gap fill below 170 and the gap fill above 165. To get more bullish, we're going to need to break back over the 200 daily moving average just below 181, and if we can do that, we'll get the bull breakout above the wedge and start pushing towards 190. On the ARKK ETF, we were up 2.75% today with another bull breakout above 46, and above 46, we likely start pushing towards this gap fill below 49. We're still above the support trend line, and we still have a higher low, higher high breakout while we're above 41. So you can stay bullish above 41, but a much better risk level to use will be this breakout right here at 45. On the VIX, we were up 0.16% today, and the VIX is still sitting down near this support, and I think to make this easier to see, we'll just move this previous support up to the zone right around 12.8, because that is where the VIX has been bouncing all year long, and I do believe that's where the VIX is going to bounce yet again. Now keep in mind, this is just a ghost print. The VIX never actually bounced this high, but it's very likely going to do so soon, especially if we get that pullback to the higher low down towards support. On Bitcoin, we're currently up 1.74%, and Bitcoin is still failing to break this resistance at 38,000, even though it continues to attempt to break out, and we are seeing some decent volume. Maybe we will get the breakout tomorrow, but we can't get bullish unless we can break this resistance, and then we'll be looking for the next price target higher at 40,000. You can stay bullish above this breakout and support at the rising 20 daily moving average at 37,000, but if we break below that, look for a retest of support at 35,000. On Tesla stock, we were up 4.51% today, and we got the bull breakout above the triangular wedge, and we did break the previous high and resistance at 244, which means we can start pushing higher towards 255 and then 262. So you can stay bullish now above this breakout at 244 as we continue to build this bull trend, and if at any point we break back down below this breakout, this could have been a false breakout, and we'll be looking for a retracement all the way back down towards 234 to 230. On Apple stock, we were up 0.32% today, and Apple is starting to bounce off of this support at 190, but if it can't hold this support, we will be looking for the gap fill below at 186. If we bounce from this support and break the previous high above 191.5, then we can start pushing higher towards 194 and then the previous high at 197. So jumping back over to the S&P 500, I do believe we're losing a lot of the bullish momentum, but we could just be consolidating and going sideways before the next push higher, but I do believe a pullback is very close, and it's likely going to take us at least to the rising 20 daily moving average. So be patient. Trading takes plenty of discipline and plenty of patience. And just because we're waiting for a pullback doesn't mean you need to go crazy on shorting. You can simply just be patient and wait in cash. We're absolutely crushing this market on Bank Trade Alerts, so if you want to come crush the market with us, you can find out how to join Bank by clicking on the link in the description of this video. I also have the Stocks Channel Discord where you can get access to all of my intraday updates and analysis. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.